Divas. Connie Mort's here. I'm National Director with Peer Romance and Senior Board of Directors, and also your Glistening Divas team leader as well. But today we're going to talk about taxes. I know that it is a strenuous subject to talk about, and everyone hates it and dreads it. But it's not always a bad thing. As a new consultant, a lot of times it can actually help decrease your taxes and maybe even give you more of a refund, because now you're being self-employed, and as self-employed people, we get to deduct things that normal cannot. So part of our utilities, our cell phones, all sorts of our natures like that as well. So today I'm going to show you how easy it is to actually kind of keep track. And I have made a Excel document that you can actually use and submit into your tax accountant as well. So if you are not, or you don't have the funds, or you don't want to go buy Quickbooks or consult for an office or a program of any sort, Excel, usually everyone has it, and I have it here for you. So that way all the formulas are filled out. All you have to do is just go in and fill all the information in, and then bam, at the end of the year, you can print off these sheets of paper and just give it to them, and you are done. So I'm going to go over to the Excel document, and everything is in there, so you don't need any extra information. I'm going to go ahead and share this. I'll just share the whole thing. Yeah. Okay, so here is the template. It's a profit and loss, also called the income statement as well. And so, and I put 2015, you see everything is zeroed out. So one thing that I do want to show you is the items here that I have highlighted. These here are ones where it says you can input in these fields. And then everything below here says do not fill in expenses. They are automatically populated from the expense worksheet, okay, that I have already done for you. And then towards the end, these are some additional stuff that you can fill in. So here you'll see that I have actually inserted comments. So when you click on it, it will tell you, okay, this is what sales is, this is what the amount of your 1099 that you get, any refunds, you know, any of these kind of sorts of stuff. And I kind of help explain a little bit in each of these. So, all right, so we're not going to worry about this because everything basically over here is populated, okay? So say that we're at the beginning of the year and whatnot. You are going to obviously first start off with your invoice. So whenever you purchase Peer Romance products or purchase from Peer Romance, you want to keep kind of track of that. And even though we have the invoices, it's easier just kind of put it all in Excel so that way it calculates everything for us. So of course your day, your order number, this is going to be your product total. And I just realized I probably should have made a copy of what that is. So your product total is going to be the cost of your products, okay? Additional discounts would be, you know how sometimes Pure Romance says, okay, if you order $300, you get 5% off. If you order $600 in retail, you get 10% off. If you get, so et cetera, et cetera. So those additional discounts that Pure Romance gives us goes here, okay? And then your supplies like your catalogs, your order forms, your invitations, etc. So there's a spot on your invoices for supplies, and of course your shipping and your tax. And then again, it's highlighted. It says do not enter in these highlighted fields, okay? These are already calculated for you, so it adds these up or for you, okay? And then towards the end, it'll populate everything here, and then I have a double check feature as a doing this before, you always have to double check your numbers, make sure that the formulas are correct and everything. I've already kind of checked this out for you, so as well. So throughout the year, you're just going to enter that in, and then throughout the year, you're also going to enter your sales. what I suggest is all of your order forms that you get from your clients, sort it in by month, and add up all the receipt or add up all the order forms at the end, the amount that you actually collected from each client at every party or in your outside orders. So the actual amount that you have collected from them, including the tax and the shipping and everything, is the amount, and then just put the grand total amount in here. All right. And then of course you have your expenses. So I've kind of grouped them out from months. Technically I could have done this just like I have done with the sales, but sometimes it's just easier if you just want to take 1 month and like, okay, these are all of my receipts that I have for January. And sometimes it's easier just to kind of type and hit enter. So that way it kind of helps calculate for you. So a little extra or a little less work for you. So again, all of these right here says what is an actual and office expense, what are supplies, what is postage, what's considered to be what type of expense, okay? And then you're going to put them under these columns. After that, then of course, then it populates and calculates everything down here. And this grand total is here as well, okay? So it's all of basically your entire expenses that you have had for the year. So I want to really, and then your business home expense. Again, remember, as I said, as a self-employed person, you get to deduct other things that most 9-to-5 job workers are not able to use. So you're going to enter your total square footage of your house or home, wherever it is that you do your place of business. And then if you have like a separate room that you use just for your pure romance, this is where you're going to take your square footage of your office space and put it in here. And then this will automatically calculate the percentage that you can take. So we'll just say, for instance, it's 1,000 square foot house. Okay. And you use 100, your office space is 100 square foot. So with that being said, then you have 10% of your deductions you can take as additional expenses for your business. So when you get your bills, you just enter the bills in here. Okay, so we'll just go put 200 here. And we'll say water is 30, your cell phone is 150, your internet is, I don't know what's internet, 50. If you pay any dues, fire dues, right? And then any of your trash. Now your trash, I believe would be considered, some people will not, but we have big boxes. Our products come in big shipping boxes. And a lot of times with the trash, we might have to get like a dumpster or whatever to put in there because a normal trash person cannot pick it up and use it. So depending on what area or what city that you live in, that could be the case, right? So your trash, and then of course at the end of the year, you will get your mortgage interest, your house insurance, and also your real estate taxes. A portion of these, actually with here being your 10%, would be tax deductible for your business, which goes on this form. Not that it really matters to you, but so just print this out and give it to your tax accountant, okay? That's where these information will come from. So if you don't know where you get this, this is only obviously if you own a house. You will get this from your, let me open this up here, from your mortgage interest. So if you see the 1098, I've marked off my information, obviously. So this is the interest right here that will go into the mortgage interest. And then usually if you have your taxes escrowed into your house payment, it would also be in here as well. So 346, 45, and 750. We'll just say that 346. I don't remember what I said. We'll just round it up to that. Okay. This usually you'll have to call your insurance to find out what that is. And I forgot what I said here. 750. Okay. But we're just going to now. You would normally fill everything in here. I'm just going to put random numbers in here so that way. not 10,000. 1, 2, 3. So that way there's actually some numbers. Oh, it's really big numbers, man. Oh, wait, that normally your dues aren't that much. So we'll do 120. Okay, so we just inputted some numbers. So this is your business portion of your deduction. So I've actually put it in here, and whatever this percentage is, it kind of calculates out through there, and that's your total. When you go to your profit and loss, you will see that some of the stuff has populated over. Well, let's go ahead and put some expenses in. That way it shows. I'm just going to put random numbers again. Whoops. Tab. I'm really not good at just putting random numbers in things, aren't I? Nor do I know where my tab feature is. Okay, all right, so now we get the point, okay? Except I think I probably need to do not enter in here. I need to highlight this field. Okay, so, all right, there you go. So now we got some numbers in here. Your invoices, let's just go ahead and put 10,000 plus 600. Okay, got it. And then your sales, we will just say everything is added together. Say that you did 100,000 is how much you collected. Okay. Got that, got that, got that, got that. Okay, so now everything is populated over in here, okay? So that way everything is in categorized exactly where it needs to be, okay? Your meals, I do want to say that your meals are you can only take half of your meals as a deduction. So in your expense, you're going to enter it in as whatever is the amount that you paid for it, and then on your taxes, you can only take half. Okay, so I've already kind of done that there for you. So really quick, we can kind of go through some of this. So your sales, again, your sales is the total amount that you have collected from your invoice, the actual amount that you have collected with your shipping and your tax and everything. Okay. This next one is your 1099 income. From Pure Romance, you will get a 1099 miscellaneous. And if you have sold or bought more than $5,000, you're going to get a 1099 from Pure Romance. But that does not mean anything. That is just showing that you should have in your sales up here at least $5,000. So I will show you what that looks like. Box 9. Okay, it is actually box 9, and it's going to show you right here that it just says payer made direct sales of $5,000 or more to consumer receiving it. So this is just telling the IRS, hey, she needs to have at least $5,000 in sales in the sales box. Okay, that doesn't mean income, like your ending income. It just means sales-wise, period. So your number should be at least 5,000. Okay, that's all that it states. There's nothing entered into Pure Romance or to the IRS or anything like that. All right. So that is what that states. Let's go back here. But if you do have an amount, this is where you actually input in. Remember, it says you can highlight in these fields. Okay, which is box number 7, which is not employee compensation. So non-employee compensation. This will include any prizes that you have earned through the company, any downline checks that you have received, any trips, incentives, and also your free product is also included here because that's considered a prize. So this is going to be your group sum. If you need a detailed, you need to contact Pure Romance and have them give you a detailed amount. Okay, so that way you know everything that's detailed over. So this is what is that. So that's a lump sum of everything, right? And So then that actually, you'll put that in that box as well. So you see that I have put down, it includes this prizes, trips, downline income, etc. Okay, so that's going to be on box 7, right? Any refunds, whatever, this has been populated from the expense worksheet. Your inventory at the beginning of the year. This is your cost of inventory at hand at the beginning of the year. So obviously, if this is your first year, that is going to be 0, right? But if this is your second year or more, whatever your ending inventory from your taxes last year should be your beginning inventory. And again, this is your cost of your products, okay? Your purchases, obviously it came from your purchase invoice over here, okay? And what this amount entails is your product total minus any additional discounts that you have received. The reason being is because whenever Pure Romance gives us 5, 10, 15% off of retail, it goes off of your product, not your supplies, your shipping, or your tax. So it actually decreases your amount for your purchases. So that's already been calculated there for you. And then of course, then you're going to count at the end of the year your inventory that you have on hand as of December 31st. Again, it is your cost. If you did cost up here, you have to do cost down here, okay? So it is your cost of inventory at the end of the year is what you're going to enter in this field here. So then, of course, so if we'll say that this is the beginning of the year, and then we'll say that you have $5,000 in cost at the end of the year, so which means your cost of goods sold is $4,400. So that's the amount that you can actually deduct on your taxes that actually lowers your income. One thing that I do want to let you know, the less inventory that you have at the end of the year, the more that you get to take this as a deduction. So basically, it's whatever purchases that you have made, and if you're still holding on to some at the end of the year, you can't write off every single purchase that you made. So by keeping the less that you have at the end of the year, the more that you get to deduct from your purchases. As you can see, formulated wise. All right, so we have 5,000. You'll see this number is 4,400 right now. So say now I only have, maybe I did really good and I sold most of my stuff at the end of the year and I only have 2,000 in inventory, my cost at the end of the year. So now you see it went up to 7,400. That's the amount that I can now, that decreases my income, okay? I don't know if you've noticed that when you see the gross income. So we'll change it back here again. So we'll do 5,000, all right? So my gross income is right now 95,600, okay? But I have 2,000 left instead of cost-wise in inventory. Now my income has decreased to 92,600. Okay, so all right, and then the other income is your 1099 miscellaneous box number 3. Most of you probably won't have to worry about it, but I'm going to show you when I was in summer parties, I had a box number 3. Okay, I liked how summer parties did theirs. They actually did. Pure Romance gave me one for box number 9, one for box number 7. Summer parties just put it all together in one and on one 1099 miscellaneous. So this is my box, my other income, my 1099 income that I have. And then of course I did more than 5,000. And then this right here, the reason why this is here, this is like any, even though this right here is what I received as a prize, this was the car that I won with slumber parties. It was my GMC Acadia. So this was the value that got transferred over to me was 31,000. So that gets actually taxed a little differently from that. So that amount would then go here. More than likely, you won't ever have to worry about that, but just in case, that's where that goes. All right. Now we're going to your expenses. Remember, all these were populated. So your accounting fees, obviously, advertising, such as Facebook ads, Google newspaper, bank charges. Contract labor would be if you pay somebody to help you enter in your parties or helps you label your products or anything like that, and you actually give them an hourly wage, this is where you would enter that information in, and a check is the best way to do that. Do not ever pay them in cash, because then if you ever get audited, you cannot prove that you have given that to them, and they will take that deduction away from you. So other interest is like maybe any interest that you have of business loans, okay? Miscellaneous, do not ever use miscellaneous. I don't care, I know it's on here, but noted, do not use miscellaneous. Usually anything that you spend can be in some kind of category, okay? So especially if your miscellaneous amount number here is high, that kind of is a flag for IRS. And like, well, what is all this miscellaneous for? And then you'll be audited. I will tell you, once you're audited, more than likely you will always be audited, okay? So your office expense, I know that a lot of people between that and office supplies, like what is the difference? Where do I put these information? Like I don't know what the difference is. It is somewhat interchangeable, but it's really kind of hard. But your office expense is your office operating expense. That's related directly to the operation of your business. So office expense can include your computer software, your office equipment, computers, printers, laminators, different things like that you need to use in the office, more like equipment-wise type like things, okay? Things that are more sturdy, things that are going to last you a long time that you don't have to replace often, things like that, okay? And then we'll jump down to supplies. Your supplies are more like your paper, your pen, your tape, your staples, cards, different things like that. Things that you use all the time and have to reorder all the time because you use up. So those are more of your supplies in there. Also, your desk chair sometimes can be considered your office supply as well, okay? All right, so parking and tolls, obviously, postage, stamps, shipping, plants, anything like that, okay? That's your postage. Travel, this is like if you're maybe traveling far away and you need to stay at a hotel and whatnot, this is where you will enter that amount in here. And that's just like I said, hotels and things. You'll see in the notes it says do not to be used with convention/training expense. That should go under here. So your World Conference Hotel, your National Training Hotels, all that stuff should go under here instead of under there, okay? And I will explain why in a little bit, okay? So that's where that should go, all right? Meals, we've already kind of talked about that. Your credit card fees, if you use Square, PayPal, or if you use the card processing through Pure Romance, you need to record those fees here. Your NSF checks, anything that you get returned. One thing on here is that if you collect a return check, so say it was $27, let's go over here real quick. So let's go find NSF. Okay, so say that, all right, the check was say $50. It was returned back to you. The bank charged you $25 for that. You're going to obviously enter it here. But say then like a week later, she's like, oh my gosh, I'm so sorry. I'm so sorry. What you're going to do is usually you collect $45 if a check has been returned back to you. So, which would mean that you have collected $95 from her. So when you do that, you would put -95. All right. And if you do this properly, then what happens is that, let's go ahead and maybe change this to, let's do another one here, and then -95 here, and then take this out, okay? You'll see here now that's a -90, which means that you have actually made a little bit of income from your NSF checks because you have collected the $45, and in case your bank charges you say $25, you did make a little bit on it, but then again, who knows, this bank charge of $25 really could be $90 because maybe this person, because our check balance has put you in the hole and it charged you more. Okay, so, but this is regardless is now -90. So whenever you go in here, it says -90, and that's what's going to happen is that the your accountant will know that more than likely you just made more off of it. Okay, and then it actually will come up here as your income. Okay, or just leave it like that and just kind of decreases your expenses. So just leave that part alone and just and that's where I would put that. Or another way that you could do it, I want to confuse you too much, okay, is so these two right here, okay, she paid you back, so now it's going to be -50 here, so now it's 280. You can put it, offset your bank charges, okay, or you can put it under your returns and allowances over there. So you can do that, so that way then you will be like minus 100. We'll just do 100 and take that out. Okay, so which means now you have a $10 income from your bank charges. So that way, maybe this looks zero, knowing that at least then maybe you can keep track for yourself on, okay, so I've collected this money from this client, I've collected this from this NSF check, etc. So if it's zero, then you know that you have collected all of the return checks that you've gotten for that year, and then just change it over to your bank charges. So, okay, all right. Any stolen items, it doesn't really happen very often, but just in case, you'll do that at your retail value. And your expo expense will be your booth fee, your advertising for your expo, banners, tablecloths, anything that you have expo expense wise. Okay, if you have a prize wheel just for your expo, then that's where this would go in. Okay, all right, your training convention, any of the regional trainings, the World Conference and national trainings, that's where you enter. That's what that is. Your meeting and team is anything that you do for your team meeting. If you're a leader and you conduct your own meetings, this is where these items here will go, anything that associates to that. Client recruiting expense. So if you take your client out maybe for Starbucks, or you're meeting a potential recruit and you buy her a drink, that would actually go here instead of under meals. Okay. Meals are more of your personal while you go to and from your parties. But this is more of an actual expense because it's like a client appreciation. Again, like your recruiting expense. Your sales tax, this actually comes from your pre-romance invoice here. Okay. And taxes other will be anything else other. So more than likely this will also be zero. And then your prizes. Any prizes that you give out to clients, keep track of that. Any prizes or jewelries or anything like that that you give out even to your team would go here. Keep track of it. So, which means that, so I did a meeting and I gave away a aura massage oil and a heart massager. So Julie got the heart massager and Sarah got the aura. I would actually make an order form and write down Julie's name and that she got the heart massager, and then same thing with Sarah that did the aura. That way you have backup and proof that you gave these prizes away, and then you can give them the other parts. The reason being is if you have given more than $600 to any individual, you're supposed to make a 1099 for them. Okay, so this amount here could be very well be $2,000. Okay, that doesn't mean you have to issue 1099. It's only $600 per person. So you need to keep track of what you've given away as prizes, so that way you can tell your accountant, hey, this person needs a 1099, okay? Because then she's supposed to record it up here, all right? And then same thing with your 1099 income. You won't get one in a box 9 unless you've collected or earned or received $600 or more, all right? Anything that you can keep track of for your prizes and stuff. So that goes over there. All right, so delivery and freight. This is actually shipping from your Pure Romance invoice. Okay, here again. your supplies. So there's two supplies, so I actually joined them together. So this is from your normal expenses, and this is from your Pure Romance invoice. So we get supplies, obviously your catalogs, your order forms, all that stuff will be considered supplies. Here I've kind of grouped them together so that way it adds these two together. Same thing with your dues and fees, your fire dues. Remember this again is the 10% portion from your home office business expense right here. And then any other dues or fees, I don't know really what that would be per se necessarily. Oh yeah, your Post My Party, your Cent Share, your Stamps.com, your Zoom, you know, those would be your dues fees. Obviously your phone, that's all of these come from the Biz Home Expense worksheet. To make sure that you have not accidentally entered something into a field that you should not have, that included, that you accidentally somehow entered something in here instead, right? And so what I've done is I have made these double check features over here as well. So if these are 0, then you are good to go. So basically this should amount the total expenses on the worksheet. This one right here is the total on your Pure Romance invoice, and this right here is for your business. So you'll see that I've added, if you double click on these, that you can tell that what part of that comes from that. So that way, make sure that these are zeros, okay? Which says it right here. Dude, my dog is stop. Sorry. All right. So down here at the bottom, if you purchase any equipment, this is normally what I would say big purchases. So anything that maybe that you might not need all of the expense, but this are items that goes on your depreciation schedule. Also maybe your vehicle, right? But more than likely you're just going to take mileage on your vehicle unless you purchased it only just for your business. You just name them off here and your date purchased, okay, and also the amount. Maybe I should put amount, okay. Mileage, you should keep a mileage log book. You should have one in your car at all times. Anytime that you go to a party, you write the beginning odometer mileage and then also the end when you get back home. If you're taking deliveries out, you need to do the same thing. But you also have to write down the reason why. You need to write down whose party you're going to and what city, why you're using these mileages for. So if you're going to audit it here, IRS will want to see that. All right. So this will be the total here that you have written down in your mileage book. All right. So you can get one for like less than $3 at Office Max or Office Depot. That's where you're going to enter that in. Okay. These are your days traveled. Okay. So this is why I said anytime you do World Conference or national trainings, different things like that, you need to put it under here. Okay. More than likely with these will require for you to go out and stay the night. So which means you're not home working, that you're actually traveling and your days out the days that you could possibly be making money. All right. So you time your travel, how many days you were out. Okay. And also your dates. So when you're going to put the expense, your expense is going to be here, which actually, remember, it's actually from this worksheet, okay? So the amount is going to be under there, but you're going to put all of these days out. Now, anything below here, basically, these are your one-day trainings. Sometimes you're not even going to be out of a full day. You're not even going to stay the night. Especially if it's like 40 minutes from your house, etc. You're not going to enter these here at all. So, which then really which would coincide from here, because these are only going to be the ones that you're having hotel stays. So if you're not staying at a hotel here, there shouldn't be anything here versus no expenses there, okay? So the reason being is because how you deduct that is there's a per diem per day that you get from the IRS. So depending on, there's an average that your tax accountant will use, and it says like if it's like $45, or not $45, more like maybe $109 a day, and that will include your meals, your expenses, all that fun jazz. Okay, this is where that's going to they're going to take how many days out. They're going to calculate by the per diem that they have, and they will see which one is greater. Whichever one is greater is the one that they will use. So sometimes your expenses here could be actually less than the days out, which means then you even have a more greater tax advantage because they took the per diem versus the actual cost, which is a win-win, right? Okay. So, all right, so that's that. All right. So after that, at the end of the year, you're done. Everything is great, and all you have to do now is actually just print this sheet here out. Print this out, print this one out, right? You do not necessarily need to print out your expensive, your invoices, or your sales. Just make sure that you have your backup for these, but it is more of these 2 pages that you need to print out and just give to your tax accountant, and they will have everything for you. Easy as that. Okay, so all you have to do, I'm going to recap real quick. All you have to do monthly, okay, is your normal expenses over here, okay? Then, of course, your everyday expenses. Enter in your invoices and enter your sales. At the end of the year, once a year, you're going to enter in here and here, 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 and here, and here. That is it. So as long as you keep this up, so as long as you keep it up and consistently every month, so if you want to set like the first week of the month, you're going to keep track of all of your invoices, all of your expenses, all of your receipts, everything, and just take a day and enter it all in. That's what I would do. Keep a Vidalia folder of all of your expenses. I will go and put them in by months, just like I have in the Excel spreadsheet, how I said, okay, January, February, March. Keep them, all your receipts, and put them in there. So that way all you gotta do is pull them out and you have your expense in the right month. This can also help you later on in the future whenever you make a lot more money, and also when they need to know maybe a month-by-month basis. If you're on the verge of becoming a LLC, to be incorporated, they need to know what your projected income might be. They need to know what you've already done versus maybe what you did last year, so that would help project. If you don't have all that stuff organized already, it's going to be hell whenever you need to have that review time to come in. You're going to be frazzled, and then you have your business to run at the same time, and your parties to do, and your team to keep track of. So if you just do this now and keep organized now and make it a habit now, is going to save you. And then you don't have to worry about extensions at the end of the year. All you got to do is like, I'm done. It is January the 6th, and I have everything that I need, except I'm just waiting maybe on my 1099, your mortgage interest, your 1098. So to enter that stuff in, everything else is already done. Done. How nice would that be? So that way you don't have to be frantic on April the 15th, try and put everything in, or filing for extension, and then end up being like next year before you get to do it, and then the IRS is on your butt trying to say, hey, where's your tax return? Okay, so that's all I have for you today. If you have any questions, let me know. Oh, one thing I do want to say, if it is this is your first year in business, your startup costs could be completely expensed out. Just make sure you talk to your tax accountant about that, which would be including the cost of your kit, okay, or anything else that you have or needed to get for your business. So just make sure you have that amount there and give that to your tax accountant. And also, one controversial thing that everybody's like, oh, your clothes for your business is tax deductible. Oh, this is tax deductible. Oh, that's tax deductible. And actually, it is not. It is not tax deductible. You cannot deduct your clothes. I repeat, you cannot deduct your clothes. So here's a ruling on the IRS for you. Okay, my dog is having a fit. Okay, is the rules for the IRS is work clothes that can double as street or even evening clothes are no more deductible than anything else in your closet. Okay, so what that means is if your work clothes can also go out as your street clothes when you go out for a dinner, when you go out to see your friend or a date night or whatever, that cannot be deducted. All right. Most of the time for us, we buy the clothes and yeah, we might designate it just for our parties, but the IRS says no because it's something that you could just grab out of your closet and just wear out on evening. Okay. So even military uniforms that can be used cannot be deducted as they can also be used off duty. So it's not a guaranteed deduction. The IRS will even do that. So these are the stipulations for you. Same thing with your shoes. You can't deduct your shoes. Sorry. Okay. And we have no rule in Pure Romance saying that we have to dress this certain way or this certain outfit or this certain brand or anything like that. It is not tax deductible. If your accountant allows you to do that, it would actually just be on your Schedule A, which is your itemized. And if you don't itemize anyway on your tax return because you use the standard deduction, then it's not deductible anyway. So you can try, but unless you naturally itemize, it has to be like 2% of your AGI anyway, above your AGI in order for that to be deducted. So either you're going to have a crap load of wardrobe that costs you millions of dollars for it to be even considered to be deducted anyway. So it's just not even it's not even worth the hassle. So all in all, your clothes are not tax deductible. Okay. So, so that goes forth as your jewelry, your nails, if you need to get your nails done, because that's also could be very personal at the same time. Your haircuts, your color, all that stuff. Those are not tax deductible. So that's all I have for you. I'm sorry I had to end that on a bad note. I meant to say that earlier, so that way we didn't have to end it on a bad note. Okay, but that is it. All I have for you today. If you have any questions, just message me. This will be loaded into our Glistening Divas group, so that way you can download it on your computer and use it. And again, just stay organized. Just do it weekly if you need to, if not just monthly. So weekly, bi-weekly, whatever you need to do. Do not just wait over a month. Okay, get it all done in one day. Have it all organized and whatnot. So that is that for you. And have a great end of the year. Look forward to next year. And I will talk to you soon. Ciao.